The key to finding great long-term investments is understanding a company's products. Huge growth happens when a company has the perfect product for a hot new market, like AI. For example, if you had invested $10,000 into Tesla stock just 5 years ago, you'd have over $160,000 today. And if you had invested that money into Nvidia, you'd have almost $4 million right now. That's because these companies have incredible product market fit. But Tesla and Nvidia are two of the most well-known companies on Earth. So, in this video, I'll highlight 2 stocks that are also set to win big thanks to AI, but that almost no one else is talking about. Your time is valuable, so let's get right into it. Look, I'm not here to waste your time. So here are the 2 companies up front. Micron Technology. Micron Technology is an American company that makes memory for the entire computing industry, including solid-state drives, RAM modules, and flash memory for data centers, consumer PCs, smartphones, and even cars. Each of these markets will need to transition to more advanced memory as they start integrating more AI applications into their products and services. This includes everything from co-pilots on computers and smartphones to autonomous robots and self-driving cars. As a result, the market for high-bandwidth memory is expected to more than triple in size over the next 5 years, which would be a 26% compound annual growth rate through 2029. The special thing about high-bandwidth memory is that it packs a lot more memory into the same area by stacking memory chips vertically and connecting them to a shared hub. This lowers the physical distance that data needs to travel, reducing overall power consumption and increasing data transfer speeds. Micron makes the high memory bandwidth chips for NVIDIA's H200 Hopper GPUs. According to their latest earnings call, Micron's most advanced memory products have much more demand than supply, selling out for 2024 and 2025, with a backlog of orders extending into 2026. That's because companies like Google, Meta Platforms, Tesla, Nvidia, and OpenAI will continue building more advanced AI products and services, which means they will need a lot more high-bandwidth memory and better data storage solutions. So, no matter which company wins, Micron wins, making it a great stock to get rich without getting lucky. Value investors might quickly say that Micron stock is overpriced because it trades at a price-to-earnings ratio of around 140, which is much higher than the industry average. But on this channel, we actually do our homework instead of relying on a single number. On their latest earnings call, Micron reported quarterly revenues of $7.8 billion, which is up 14% quarter-over-quarter and a whopping 93% year-over-year. On top of that, their earnings per share are up 160% from last year. So far, we've talked about TSMC, which makes most of the world's advanced data center chips, and Micron, which makes the high bandwidth memory for them. Even though the power efficiency of NVIDIA's AI chips goes up with every generation, demand is going up much faster. This means it will take more than just efficiency gains to solve the problem. That's where this second company comes in. VRT makes power and thermal management systems for data centers. For example, they have their Liber liquid cooling systems for high-density server deployments, like the massive GPU clusters for AI application and training foundation models. It turns out that power represents around 60 to 70% of the total operational cost for a data center, and cooling accounts for 40 to 50% of a data center's power consumption. This means that cooling alone represents anywhere from 24 to 35% of the total cost of operating a data center. But one thing investors might not realize is that around 90% of all server racks are still air-cooled today. In fact, most AI clusters are still running NVIDIA's H100 at low enough power to be air-cooled, because liquid cooling usually requires significant infrastructure changes. This includes the hyperscalers like Amazon, Google, and Microsoft, who need to support power-hungry AI workloads for thousands of other businesses. One nice thing about Vertiv's cold plates and their direct-to-chip cooling solutions is that they can integrate with existing data center infrastructures, which lowers the overall cost of those cooling infrastructure changes. The global data center liquid cooling market is expected to grow by almost 6 times over the next 9 years, which would be a 21% compound annual growth rate through 2033, which means Verv has the perfect product for this quickly growing market. Direct-to-chip liquid cooling is up to 3,000 times more effective than air cooling, which has a serious impact on data center operating costs. This is what I mean when I say the key to finding great long-term investments is understanding a company's products, not just their profits. Huge growth happens when a company has the perfect product for a quickly growing market. 2 undervalued companies benefiting from AI across many different markets because they focus on helping data centers do much more with their existing power budgets. Thanks for watching.